Hello everybody, you're all in the process of learning basics of accounting through this BIT course. By now, you would be comfortable with accounting concepts, the rules of journal entry, and posting to ledger accounts. Now, we move on to different dimension of books of accounts. Till now, you have learned and practiced only one book of original entry, that is journal. The process of entering all the transactions into journal book is simple as long as business size and the number of transactions are limited. But when it comes to a larger organization with large number of transactions, it will be close to impossible to enter all those transactions in journal book. To solve this problem, the transactions are classified into different categories and recorded in separate books. These books are called subsidiary books. There are totally 8 subsidiary books maintained in a typical organization. They are purchases book, purchase return book, sales returns book, bills receivable book, bills payable book, cash book, petty cash book, and journal proper. The business transactions are classified based on their nature and record in these subsidiary books. Now I'll explain the procedure of maintaining subsidiary books. All the credit purchases of goods are recorded in the purchases book. The goods once purchased on credit basis might be returned to the supplier for some reason. Then these returns are recorded in purchase return book. All the credit sales of goods are recorded in the sales book. The goods once sold on credit might be returned to us for some reason. These sales returns are recorded in sales return book. In case of a credit sale of goods, the buyer guarantees the seller that he will make the payment in future. A document is created as an evidence of this guarantee. It is called bill of exchange. The seller would call this bill of exchange as bills receivable because he is going to receive money on this bill in future. The purchaser would call this bill of exchange as bills payable because he is going to pay money on this in future. As far as business is concerned, the bills receivable book is maintained to record all the bills of exchange received. The bills payable book is maintained to record all the bill of exchange issued to the suppliers. Cash book is maintained to record all cash receipts and all cash payments. All the cash receipts are entered on the debit side, also called the receipt side. All the cash payments are entered on the credit side, also called the payment side. The purpose of maintaining cash book is to calculate the cash balance at any given point of time. There are 3 types of cash books: single column cash book, 2 column cash book, and 3 column cash book. The single column cash book has only one amount column on either side. The 2 column cash book has cash and discount columns on either side. It means in addition to cash paid and cash received, the discount received and discount allowed are also entered in cash book. The discount received is credited and discount allowed is debited. In 3 column cash book, along with cash and discount columns, there is a bank column on either side of this book. 3 column cash book is maintained when the business wants to record bank transactions along with cash transactions in the same book. 3 column cash book give cash balance and bank balance at any given point of time. Petty cash book is maintained for recording small business expenses like stationery and postage. Journal proper is usual journal book which records transactions which are not recorded in any other subsidiary book. So these transactions are classified into number of categories and recorded in different subsidiary books based on their nature. I hope all of you are now comfortable with the concepts of subsidiary books. Now I'll explain the procedure of posting from subsidiary books to ledger accounts. The subsidiary books are totaled from time to time, and the total is posted to ledger accounts. The purchase book is totaled and the total is posted to the debit side of purchases account. The individual credit purchases are posted to the credit side of the respective supplier's account in the ledger. The sales book is totaled and the total is posted to the credit side of the sales ledger. The individual credit sales are posted to the debit side of the respective customer's account in the ledger. Purchases return account is totaled and the total is posted to the credit side of purchases return account, and the individual transactions are posted to the debit side of respective supplier's account. The sales return book is totaled and the total is posted to the debit side of sales return account, and the individual transactions are posted to the credit side of the respective customer's account. The bills receivable book is totaled and the total is posted on the debit side of bills receivable account in the ledger. The individual transactions are entered in the credit side of the respective customer's account. The bills payable book is totaled and the total is posted on the credit side of bills payable account in the ledger. The transactions in the books are posted individually on the debit side of the respective supplier's account. the cash book is balanced and the balance is taken in the trial balance and the final accounts of the business. The petty cash book is totaled and the total is posted onto the petty expenses account. The journal proper is posted to the ledger in the usual manner like journal entries. Once the process of posting from subsidiary book is completed, a list of debit and credit ledger balances are prepared to check the arithmetical accuracy of books of accounts. We will discuss the process of preparing trial balance in the next session. I hope all of you have understood the concepts of subsidiary books and the posting procedure. See you all in the next session.